Ladies and gentlemen, welcome back to the channel. Tesla stock today is down at the time of recording this video about 1.2%, but we actually have some massive news to share with you from Tesla. Now we're going to get into that. We're going to talk about what's happening in the broader markets. We're going to look at option activity for Tesla stock. And, the biggest thing that is really standout-ish of the day today is look at the IWM. It's actually green, 0.1%. But look at the NASDAQ, down over 1% today. You're actually seeing the recovery of the risk-on area, the risk-on trade, and the selling of big tech, okay? It has been a long time since we have seen this, but this is, a sign. I wanted to say probably, but this is a sign of a reversal of that risk-on trade, which will be very positive for Tesla stock. Even the S&P is down 0.76%. For the first time in a long time, the Mag 7 is the area that's really pulling this market down, while other things actually have a little bit of room to do better today. So, kind of a different market. Ladies and gentlemen, hit that like button, subscribe to the channel if you have not done so already, and check that link out down below in the description of today's episode if you have not done so already. Come join the trading community and come invest with us if you guys would like to, where we are going out to find the under-the-radar AI stocks. And, the idea is we're investing in some of these AI stocks that might be $1 billion, $2 billion market caps, with the idea of 12, 24, 36 months, they're going to be $5 billion or $10 billion companies or $20 billion companies, right? We're trying to identify the big winners before Wall Street does. And I think we've identified some big ones. I actually did make a new purchase today. So if you guys would like to check it out, that link is down below. But with that said, let's get started. So first and foremost, I just want to say Tesla stock is being dragged down along with the Mag 7. Some days Tesla trades like a Mag 7. Some days Tesla trades like a risk on small cap, okay? It just depends on the day. Now, Tesla stock specifically has been massively outperforming like a Meta, Oracle, some of your other Mag 7 stocks, okay? Tesla's down 15% from its recent high. Look at Meta. Meta, from its recent high, which happened to be its all-time high, is down 26%. Huh? I don't think any of, Wall Street would have thought in a million years that Tesla would be relatively outperforming Meta by almost a 2-to-1 margin. Oracle, from its recent high, is down 37.2%. Yeah, Tesla down 15%. It's a massive outperformer. Okay, but today it's being dragged down alongside the Mag 7. And, that's just going to happen some days. But we do have some massive news for Tesla stock investors. This is the moment where Robotaxi really goes from a select group of individuals that can use it to mainstream, okay? The Tesla Robotaxi service, Access, has officially gone wide to iOS users. Tesla has opened access today to both its ride-hailing service in the Bay Area and its Robotaxi service in Austin, Texas. People who just downloaded the app tell me they get immediate access to the service. The floodgates have now been opened. Even people from New York and Chicago are saying that they're actually now getting access as well. Waymo today has announced that they are introducing full autonomous driving in 5 new cities: Miami, Dallas, Houston, San Antonio, and Orlando. Operations start today in Miami and will begin in the remaining 4 cities over the coming weeks, ahead of opening doors to riders next year. Stifel's Tesla analyst Stephen Gengaro on FSD said, quote, on CNBC last night, you'll see increased adoption as people are exposed to it. I've been behind the wheel of several of these and the different iterations of FSD, and it is getting better and better. It's something when people experience it, they will be much more comfortable utilizing FSD and paying for it. I'll tell you now, I hate driving. Like, short distances, fine, but like an hour and a half plus, no, I would rather pay hundreds of dollars than to do that. There's many things I would prefer to do than drive. Now, Zoox is starting to offer robotaxi rides to the public today in San Francisco as the Amazon-owned company moves towards a commercial service. Did say a few weeks ago, quote, Tesla will have 500 robotaxis in Austin by the end of the year and over 1,000 cars in the Bay Area. So now that you have seen this wider public rollout, I would imagine, although we don't have some actual figures on it, the amount of robotaxis operating in those areas has gone up dramatically from the 20 or so that we had to initially start with. Now, Tesla expects the Cybercab's annual average mileage to be about 80,000 kilometers on its own, which rough math here would be about 50,000 miles or so per year. This is Tesla's ambitious goal, and it could help calculate revenue-based modeling. Now, let's call it 50,000 miles per robotaxi divided by, just to put this into a reference point for you, divided by 3,000, which is the length roughly from the East Coast to the West Coast, would be the equivalent of the Tesla, each robotaxi driving across America 16 and a half times per year. That is a lot of ride-hailing service. Now, Gally on X says, when does Tesla stock have its NVIDIA moment? Elon Musk commented and said, major valuation change when there is unsupervised self-driving at scale, and an even larger valuation change when Optimus reaches volume production, which I think is pretty accurate, okay? Once you officially solve unsupervised self-driving at scale, and you have, basically the cure for the deadliest thing for Americans, there's going to be exceptional value creation, okay? I should say one of the deadliest things for Americans, drug use is the largest killer of Americans under 40, but I believe beyond that, it is car accidents. Okay, now it's actually crazy. When I was driving to Florida, I was asking Siri all kinds of crazy questions. Let me do it right now. Hey Siri, what are your odds of dying in a car crash in your lifetime? This is crazy. Yes. Says the lifetime odds of dying in a car crash in the United States are approximately 1 in 95, or about 1.05%. You have a 1% chance of crashing in a car crash in your lifetime, or a 1 in 95 chance. Tesla solves that issue? Yeah, that's some incredible value creation for Tesla stock. Option activity today for Tesla, you have 114 different trades totaling $72.69 million with a positive order value of 56%. So it's a slower day as far as option activity, kind of neutral overall. You do have almost 1 million shares that are being sold short today in Tesla, and I think hedge funds and institutions are really going to come to regret this later this week. Short interest of free float sits at 3.1%, about $30.24 billion sold short in Tesla, totaling about 74 million shares that are in total sold short as well. Now, we really must address the elephant in the room today, which is what's happening in the markets. The NASDAQ down 1.61%, but the Russell slightly in the green. What is happening? Why is Mag 7 selling off and smaller cap companies are doing a little bit better today. No. Is it a crazy good day for small caps? Not really. Some are doing well, some are in the red, but generally it's a lot better of a day than what we've seen in the last 6 months or 2 months, 6 weeks, okay? 2 months or so, right? My best understanding of this is we are likely getting close to the end of this correction event in markets. Let me tell you why. What happened this whole time so far? The riskiest areas, the small caps, the hyper growths, the unprofitables sold off. They're down in the dumpster fire still. They haven't recovered. They're still down there, depressed as hell. Okay? Mag 7 held up for a while, as they typically do, as the least riskiest areas tend to hold up better during a crash. And then what happens? Towards the end of a crash, the big guys start to fall suit and come under pressure. Once the big guys come under pressure, then the markets are just completely washed out. And then you see kind of everything recover, right? So the riskiest areas fall first, and then they stabilize first. The bigger companies, the higher quality companies hold up better, and then they come down later, okay? So the natural evolution of this correction would say that this is a sign that things are about to get better. Now, there could be a little bit more selling in Mag 7, but I'm not super concerned about the smaller cap trade anymore at this point. Following what I see. Now, obviously, if NVIDIA wets the bed or if we're going into a recession, things are going to get worse, but that's not my expectation. Now, the S&P has almost officially fallen 5% from all-time highs. You're down about 4.8% from all-time highs. The NASDAQ down over 5%. Let's take a look at the nasty NASDAQ. Nasty NASDAQ fell 7.2% from all-time highs. And again, the Russell, which, slightly green, slightly red, you get the idea, fell almost 9% from highs. So this is a clear sign that things are stabilizing a little bit. Not skyrocketing, clearly, but stabilizing a little bit. What you're also likely starting to see, as some people on CNBC pointed out, is tax loss harvesting. Okay, you're probably seeing the tax loss harvesting in some of the big stocks that have done very well this year. People taking, profits in some of those areas. And then maybe you've seen some additional selling pressure in the small cap area of people, getting rid of some of the losses, right? It's that extra selling pressure. So that's what it seems like to me. Now, we're going to get into the news and whatever headlines we have today. We had some Fed speakers and some economic data. But let me give you my overall expectation for the rest of this week. See, I came into this week bullish. Not bullish on Monday, not bullish on Tuesday, not even really bullish Wednesday until after hours, because NVIDIA reports Wednesday and after hours. Okay, now we do have Target and TJX Wednesday pre-market, and if they have good earnings, they could send a good sign for the consumer. There's going to be, all of the talk from retailers is going to be about Christmas and the holiday shopping season. What do those companies say about the holiday shopping season? If they have good things to say, I would expect the markets to take that as positive, right? Almost like an economic data set, okay? But NVIDIA told us 5 weeks ago, Jensen Huang told us that in the last 6 months of 2025, demand has increased substantially for GPUs. Sorry if you're a bear and I'm about to burst your bubble, but AI is not a bubble. We're not even close to AI being a bubble. Eventually, AI will be a bubble, okay? Eventually. I don't know when that's going to happen, but it's not right now. Why? Because companies, they're forced to participate. Okay? It's kind of like that class speech you didn't want to give, but you had to, or you'd fail the class. Okay? Companies are forced to buy GPUs. They're forced to, create AI products and services. Even Apple, as much as they don't want to, they know they have to eventually, right? Apple, it has such a moat attached to it. I think Apple's one of the exemptions, at least for now. Google, do you think they have any choice but to compete? No. Do you think Oracle has any choice but to compete? No. Do you think Amazon has any choice but to compete in AI? No. Those are just the big companies. Then you have the mid-tiers, then you have the small caps. They're all fighting to either keep their markets currently, in Google's case, or enter new markets. In the case of CoreWeave and Nebius and some of the data centers and some of the AI services coming to disrupt Salesforce and Accenture and some of these other software-based companies. Cybersecurity's under threat. They have to invest in AI and innovations, right? It's everywhere. It's not going away anytime soon. NVIDIA is going to tell us the exact same thing they said 5 weeks ago. And Wall Street, because they have short-term memory loss, they're going to say, oh my gosh, the AI trade is alive and well? We never knew. Well, Jensen Huang told us 5 weeks ago. Okay, I'm just giving you another heads up. Now, this market, under the assumption that AI is a bubble and valuations are too extreme, NVIDIA is going to come out and reinforce that AI is not a bubble, that investment's going to continue for a long time. There's a big number Wall Street's looking for. Jensen Huang said 5 weeks ago that they have $500 billion worth of orders for 2025 and 2026. Do they still have that? What's the order backlog look like? Okay, that's something Wall Street wants to know. And I think at this point, just getting NVIDIA earnings out there, alleviating the uncertainty, is a big positive catalyst for this market, for the AI trade, for the small cap AI trade, for the large cap AI trade, for all of them. The other part of this coin is we have been in a government shutdown we were in one for 41 days. And the economy wasn't great before the government shutdown. So Wall Street's like, hey, how is the economy doing? Well, I would think the economy is better than feared. Well, if it's better than feared, then there's a lot of upside in this market, specifically for the small cap trade, because Wall Street has said, hey, look, I don't care about this new AI stock that's $1 billion market cap trading at dirt cheap valuations on a price to sales basis. It's unprofitable. If we go into a recession, that stock's going to collapse. They're not going to be able to raise capital, and they have a chance of going bankrupt, right? That's the Wall Street narrative, like 2022. Wall Street didn't care about any company unless it was profitable. If you were unprofitable, you were out the portfolio, okay? That trade idea started to work its way back into markets. That's why, like in the trading community, we have 2 stocks, both of them, one of them is projected to grow at 330% next year, trading at less than 2 times sales. Another one is projected to grow at over 400% next year, trading at less than 2 times sales. Dirt cheap valuations, Palantir's trading at 70 times sales. Palantir's profitable. Okay? Some of these other companies are profitable. That's the only difference. Okay? So you're looking at quality companies trading at dirt cheap valuations. Well, if the economy shows we're not heading into a recession, if credit conditions are not going to tighten as if we're in a recession, then those stocks have massive upside potential. And I think in the second half of this week, once you get Target, TJX, you got Home Depot earnings today. Once you get Lowe's earnings, I believe that's Thursday morning, tomorrow morning, maybe today and after hours. Again, doesn't really matter. We can go look actually instead of just guesstimating. We have Lowe's earnings that are tomorrow morning, TJX and Target. Then you have NVIDIA tomorrow afternoon. And then you have Walmart earnings pre-market. If Walmart says, yeah, we're looking good for the holiday shopping season. Consumers are largely unchanged. They're still resilient. They're still spending, blah, blah, blah. A lot of the same shit that Walmart has said for years. If they just reiterate that again, you're going to be looking at some pretty significant upside in this market and a year-end rally. Okay? And I think the AI/small cap area are going to be the stocks that recover the most. And I think today's price action in the big tech names is really a sign of this correction starting to stall out. Now, you can also look at fear metrics. The CNN Fear and Greed Index is at 10. Okay? Anytime the CNN Fear and Greed Index is at 10, you could basically put a chart up of the S&P or the IWM or whatever it is, close your eyes and throw a dart at it, and you're going to do well, investing in whatever that dart hits. Okay? When fear is this extreme, it's only a matter of time before you see a recovery. The guys that are buying today, you guys, retail investors that are buying this market today, you're going to be the ones that do very well on the back end once this market recovers. With the only exemption of if we have a recession. If we have a recession, then, well, that's not going to be great. Now, we're going to get a new AI investor sentiment survey coming out Thursday morning. I would imagine the bear percentage is going to go up again. It's already at 49.1%. It's already at extremely bearish levels. So, if it goes up or down, it really doesn't matter. It's already at such a significant extreme. Now, the percent of stocks trading above their 50-day moving average at 32.69%. Deep in correction territory historically. Now, if you look at stocks that are both above their 50 and 200-day moving average, it's at 15% right now. So only about 15% of stocks are above their 50 and 200-day moving average. That is really bad. Okay? Just to give you, kind of show you an extent of how bad this market has been. Now, it also looks like, in good news, we are going to be getting the U.S. weekly jobless claims data that will be released tomorrow morning. So it looks like we're going to get a little bit more clarity on the current state of the labor market. Donald Trump says on chip export licenses, there will be a certain level of chips. U.S. Secretary of State Rubio says we may have an announcement on chip export licenses today. Trump says we're working on approving advanced chips for Saudi. And the Saudi Crown Prince says we will increase investment in the U.S. to $1 trillion. Now, we did have some Fed comments as well today that seem to kind of help and hurt the markets at the same time. Fed Barkin says, agree with Powell, a December rate cut is not a foregone conclusion. Fed Barkin says, I agree. She reiterates the same thing here. She says that I do worry about the exposure of banks to private credit. She says actors in private credit have not had a lot of stability issues. Equity funding would limit stability risks. She says housing supply is still constrained as DEI. She says it is reassuring how resilient banks have been in the face of their CRE exposure. That's commercial real estate exposure. Fed Barkin says if the workforce does not increase, economic growth will depend entirely on productivity. She says that growth in the workforce may be headed to around 0%. She says there's a high risk that in the future there will be more jobs than workers. She says demand is healthy, but it is not translating into hiring. So some of these comments seem to skew more towards maybe Barkin would support a rate cut in December. You see the odds today of a Fed rate cut that fell, or a pause, that fell from 65% yesterday down to 57.2% today. The odds of a cut sit at 42.8%. Now, your major banks, JP Morgan, you name them, they're basically all calling for a cut still in December. They say the economic data we're going to get is going to show that things are not great out there, that we need a cut for this economy, but they're not recessionary either. That's the best possible case scenario is, the jobs report, maybe it's positive 20,000. It's not negative 200,000 like you're deep in a recession, but it's not positive 100,000 either that suggests the Fed does not need to or should not cut rates. So you do see the odds recovering a little bit for a rate cut, and that is also helping the smaller cap trade today. Fed Barkin says demand remains healthy. The challenge is with the labor market. She says overall sense is that the economy remains healthy. She says lower rates might boost demand for homes, but they won't fix the supply issue. Barkin said today in one of the biggest headlines that the jobs market is somewhat weaker than the data suggest. So if that's the case, then she's likely going to vote for a rate cut, right? Barkin says inflation is above target, but it's not likely to accelerate. So again, leaning more towards we should probably cut rates. She says the job market is somewhat, again, weaker than the data suggests. She says without compelling data, it is hard to get a broad consensus. She says inflation does not appear to be headed higher, but also not clear that it is heading back to 2%. Unemployment is likely to edge higher, but perhaps not by much. She says it's hard to declare victory on either mandate, but it's also not that either requires a response. Now, we did get initial jobless claims today as well that showed 232,000 for the week of October 18th. That's not as bad as expected. The forecast was 254,000. Now, the ADP employment change weekly came in at negative 2.5 thousand. The last number we had was negative 11.25 thousand. So that's a lot better than most people were expecting. New York Fed Services Activity Index came in at negative 21.7. Last month was negative 23.6. Factory orders came in at positive 1.4%. Last month was negative 1.3%. The expectation was positive 1.4%. So basically, all of the data today came in better than expected across the board, which is a great sign. Now, we're going to be getting another round of initial jobless claims coming out Thursday morning as well, so keep that in mind. We also got the FOMC minutes today, but again, that's backwards looking. It doesn't really mean, or tomorrow we're actually going to be getting that FOMC. It's backwards looking. It doesn't mean anything. Okay. Thursday, we're going to be getting the non-farm payrolls for September as well as the unemployment rate. The expectation is 50,000. Again, as long as you're not super negative or super strong, the markets are probably going to like that. You get a bunch of other smaller data sets as well. And then Friday, you get the Michigan consumer sentiment and some Fed speakers. So really, in a nutshell, with all of the economic data that we are starting to get, with the earnings we're going to get from Walmart and NVIDIA, I think the general consensus by Thursday is going to be, wow, this economy is not headed towards a recession. It's not doing great, but earnings are going to hold up. AI is alive and well, and the consumer continues to spend. And, the consensus in this market has been, oh my gosh, we're headed towards a recession. We're not going to have clarity on the economy for a while. AI is potentially in a bubble, right? I think the consensus is going to be shattered by the end of this week, and that's going to lead to some pretty significant upside for this market that starts likely on Thursday to really kick into high gear, and then, Thursday pre-market, following NVIDIA earnings Wednesday and after hours. So technically Wednesday and after hours, I think things really get moving to the upside. And then I think that's going to really continue into next week as well, and probably into December also. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.